Welcome everyone to Admiral Markets. Thanks for joining us today in the trading room here where we take a look at the charts as always. So grab a pen and paper and stick around for some trade ideas that I have today. First of all though, before we start, the disclaimer here explaining that the webinar is intended for a global audience. Please take into account that the info in this session may not be suitable for everyone, or the session itself may not be suitable for everyone. To get the corresponding info on charting conditions and other details, visit admiralmarketsglobal.com, select your country residence, and contact the appropriate entity. Also, trading for exchange and global financial markets is considered high risk. This is a high risk disclaimer warning explaining that you might be able to lose your initial or entire capital deposited on your trading account, so please be aware of the risks. This webinar is for informational and educational purposes only, and by continuing watching this webinar, you agree with the disclaimer mentioned here. Also, please seek the advice of an independent financial advisor regarding your risk involved. And by continuing watching, I already said that. And otherwise, I thank you for your attention on this risk disclaimer. Always important. So today's topic is going to be about moving averages, and we're going to use the moving averages to define the trend, look for the opportunity, look for filters maybe even, establish triggers, and decide the entry method. Good. So let me quickly take a look together with you what the calendar is going to be this week. I do believe we have NFP this week, plus we have a euro and pound interest rate on Thursday, NFP on Friday obviously. So it's quite a busy week. We had actually Aussie interest rate decision today, stays 2.5. I'm not sure what the statement has said. It was I guess a couple of hours ago. We got Spanish unemployment rate change and pound PMI, dollar PMI today. But of course, obviously, the euro interest rate could even go lower on Thursday. Pound interest rate and Friday NFP are the bigger news events this week. So with that said, let's start with our euro dollar as always. I actually have no moving averages on this template, so I have to change the template so we get the moving averages because it is a moving average webinar. But maybe before we put on the moving averages, let's quickly take a look at the monthly chart. Obviously, the month of August closed, so we have new monthly candles to our disposal, and we can use those candles to identify information such as, for instance, who is in control and by how much. Right? Obviously, if a candle is bearish, it could be a very useful signal for us. Obviously, if the close is near the low, it could be very bearish. And if we look at the euro dollar, that is exactly what happened. We have a close. Look at that, just a few pips off of the low. It's about 5 pips off, and the candle itself is about 311 pips. So obviously 5 pips out of 311 roughly is about just below 2%. So that means that it's an extremely bearish momentum candle. If a big candle like that, big in terms of time frame, has a close that near the low, 2% off of it, then obviously there was no taking profit at the end of the month. There was no traders that hardly any majority at all that close their trades to exit prior to the end of the weekend or at the end of the month. In fact, the 29th was the last day of the trading month, so sometimes you see retracements as profit is being booked for that month, but nothing of the sort in the euro dollar. So no big gap to the upside or something like that, or to the downside. So, there's nothing strange here going on. It's just a very bearish candle, and I would expect just based on that candle, one could already expect downside. We'll be adding the moving averages soon, and we can of course look at multiple time frames as we go along. But this exercise we could easily do on all pairs that we look at, and just by judging from the weekly and the monthly, we already got some sentiment based on that. Not even without drawing trend lines, not even looking at candlestick pattern. This is not a particular pattern, it's just one candle. So it's sometimes that simple, especially if a monthly candle or weekly candle end. If you're new in here, by the way, please let me know, because we'll be using moving averages, so then I will explain which ones we use and also explain why we use them as we do in a bit more detail, because otherwise we've had this trading room already now for a year and 3 months, and there are many people, I would hope, that come back regularly and they know why and what we do more intensively than maybe if you're new in here. So if you're relatively new in here, let me know. Otherwise, I have a certain rhythm and would maybe ignore things that are still good to explain to someone who's new in here. Besides that message, I have a second message. I'm expecting a carpenter actually to arrive today, with the unfortunate time that he could arrive anywhere between 8:30 and 9:30. So if he calls, I just need to run down, let him in, and it will be just a 2-3 minute break and I'll be back. So that you're aware of that I might need to pop out just for a second. So back to the analysis. What else can we do on the euro dollar before we add moving averages? Well, we could add trend lines, for instance, and we know that this is very much looking like a wedge. Let me, actually I forgot my drawing tool, 1 second. I need to quickly open that. Apologies. Hope you all had a good weekend. It was a bit rainy here, but still had a good weekend. We bought some furniture, which we still needed for our new place, in fact. Alrighty, we're living a bit closer to the center now, closer to friends, so that's good. Always a lot of work when you're in a new place, unfortunately. Alrighty, got my drawing tool open. Good. So we're in this triangle of which could be an A, this could be a B, this could be a C, this could be a D, and this could be an E. Right? Now that triangle E, if that is the finish, then it's probably part of a bigger A, and that triangle is probably part of a B. All right, where this whole B is kind of a correction, right, after an impulse up and down. So if that's the case, we could see an impulse down, and that impulse down, as I've been saying, is doing pretty well so far. We see that we've had a break of a rising wedge like this, if we use these orange lines to indicate that rising wedge, which happened roughly about a 6/18 fib, which is typical. So we're seeing that these things are adding up, and we're seeing a fall, a pretty fast fall so far. You can see this is on the weekly chart. Look at that. Pretty fast fall, as we would expect if we are breaking to the downside in a rising wedge end of triangle formation. So that all is playing out, and you see the daily chart here making a lot of extensions to the downside. 131 is a support level here. Does it have to be the bouncing spot? No, it doesn't. There could be some pause here, though, maybe a hook back to resistance for further fall. That's what I would expect. Either a bear flag or maybe a bit steeper retracement for further downside. So I don't think that 131 will be necessarily a big turning spot, but it could be a stalling spot, after which if we break 131, we should see price accelerate down to 130. That could be a biggie, or 129, which is a target, or eventually even to test this bottom, 127.50. Those are levels we have to deal with and be aware of and reckon with. So those are the euro dollar levels. And we can do the same thing with the pound dollar, and then I suggest we move on to the moving averages. Monthly chart, and you can see also when we look at the candle itself, bearish. The close was further away from the low than with the euro dollar, so a bit of a bounce there at the end of the month. Not a major one, still quite dominant, the bears, and that's 2 months in a row. Obviously not as much bearishness as the euro dollar monthly chart, but still 2 months in a row. Plus, as we know, we've broken this uptrend channel with this clear monthly breakout candle. So in this regard, I would not be surprised, knowing the pound, that the upside momentum that lasted more than a year is over, and we're going to retrace this swing high, swing low. For a downside, we could bounce at any of these fibs, but to be honest, I would expect price to go down to a lower fib. So although price could bounce at the 38.2 fib, I would expect only a bounce for more downside. And maybe something like this, for instance, could happen. In the bigger picture, why do I think that the price could retrace down? Usually speaking, when you get some turn, you get a when you get a turn here, for instance, price tests this bottom, right? When you get a turn here, price tests this top, and it does so again here with this bottom, right? And again, it tested this top. It actually broke that top a bit. So that's why I think a retest of this bottom is in the cards at this moment. If I look at the monthly price action candle, all right? So with that, just basic analysis on higher time frames, let's take a look at lower time frames also, and the moving averages. But I have to switch the template. And I'll just take a few seconds. In the meantime, I might as well tell you that the moving averages that I'm using, because I see Judy is new in here. So the moving averages used are at the moment 21 EMA, 21 EMA close, low, high, and 89 EMA close. The 21 I call a band because there are three, low, close, and high. And 89 is the single one. I also sometimes use 34 instead of 21. I also sometimes use a 144 instead of 89. You probably know that, but and in general, I will hopefully go into more details when the charts are on the right template, but in general, obviously you can use moving averages as a guideline for trend, as a guideline for, okay, price is back to the moving averages, so this could be a good opportunity. You can use it for the angle to measure how much momentum there is or how corrective it is. 12 to 1 is a lot of momentum, 5 to 6 o'clock is a lot of momentum, 3 to 4 or 2 to 3 is a lot of correction because moving averages are more flat. And you can use it for deciding not only the trend, but where's the breakout level. You can use the moving averages as that moment. So there's a lot of things we can use them for. Good morning, Mike. Mike is asking, what about Mundo Basket? I'm a bit confused. You mean like basket trading, like trading multiple pairs? Is that what you mean? Or do you mean like the world is in the basket case? Because Mundo is world, so maybe I'm not sure what you mean. So, oh, the basketball game. Okay, that could be the other option indeed. Basketball. No, I don't play basketball. I did a bit in the past when I was a teenager, but very recreational. So, is there a World Cup going on? Maybe. Yes, new place indeed, Björn. So hopefully it will bring good luck. I should get some four-leaf clover somewhere. Let's see. What Mark is asking, what indicators are you using to automatically plot support and resistance on monthly, weekly charts? I'm new in here. Well, first of all, thanks for joining us, by the way. Great stuff. And second of all, to answer your question, is that I just use tops and bottoms, basically. So I use the horizontal lines most of all by just dragging this on the charts. Now, there is an indicator I have that does that automatically, kind of, but it slows down the charts a lot, which is quite annoying with the webinar. You might not find it that annoying, but it does slow it a bit. If you would like that, it's plot support and resistance. I could send it to you, but you need to send me an email so that I don't forget. All right, and then I can send it to you. But I personally, most of all, use it manually. How do I determine the clock angles? It's something I too discretionary. It's not something I really measure very precisely, but more as a rough guidance, right? So for instance, this is the euro dollar 1 hour chart. And what I most of all do is that if I see a good angle on a one particular time frame, I like to zoom in. So for instance, here on the hourly, we see that the angle is getting pretty bearish here, pretty good angle. So on the lower time frame, we'll be able to catch a part of the momentum. Whereas here, for instance, we're even green. Here had a slight angle up. Here we're flat on the left side here. So I don't really use it as a, very precise tool for calculations, more as a loose guideline. So let's take a look at the euro dollar now. Let me refresh this template so it's all, anything that we didn't put on the chart is not there. What you'll see on this chart is, besides moving averages, you'll see pivot points, by the way, and the Camarilla, and 2 oscillators. So the euro dollar, obviously a lot of bearish momentum. The moving averages have stayed aligned to the downside ever since this massive downside here started at 134 for almost 400 pips in one shot down. Here we had a big consolidation, and of course we had a downtrend prior to that as well, but I won't go into that. Right. So from the 4-hour perspective, you can see that a bit better, or the daily even. And you see that every time frame the moving averages are aligned and bearish. And we had a lot of potential to trade that bearishness to the downside, right? At multiple times using these moving averages. What could be an example for those that maybe are newer in here? Depending on the time frame, obviously, if you would trade a daily, for instance, you see the moving averages aligned here. So when the daily candle closes below it, for instance, like here or even here, that could be a way to trade a breakout to the downside. Or if you're trading a move back to the moving averages, for instance, here, price touches the moving averages and bounces off of it, that could be another way of trading that on the daily chart. So anytime price moves away to it, from the moving averages, or to it in a retracement style. For instance, here we have price making a momentum and then moving back to the moving averages as a retracement. The AO is back to the zero line, another confirmation that price has retraced back to resistance. And if then price starts to either show a candlestick pattern, for instance, or break below the moving averages, those are potential trades that are with the trend. So those were a couple of examples on this daily chart. And you can see that the AO is strongly falling to the downside. 4-hour chart, good news. It's not finished as yet, as far as I can see, because the daily is growing on the AO. The 4-hour is not showing any divergence between these bottoms, and most recently has the strongest AO right in this fall. So no signs of a stop as yet. We are going probably back to the zero line here. So that's one thing that I would like to see. I would like to see the AO go back to the zero line, make a retracement, and then we should be ready to break and fall again to because of the AO that is not showing divergence. So the path of least resistance based on the AO, in my opinion, would be a retracement and a follow through to the downside. And the moving averages are indicating that strong trend, as you see. Looking at the angle of the 21 band, it's really at a 5 to 6 angle here. I mean, this is what I would define as a 5 to 6. I mean, maybe it's, it's, as I said, it's something I just measure by my eye, but it looks very steep. So this is a 5 to 6 example, I would say, right in here. Now, other ways we can measure how far a trend can go, because of course the moving averages are bearish, doesn't mean that we must continue down, right? Moving average, only thing the moving average is saying is that we're in a bearish trend, and the trends can go far, we know that. But will they still continue today? Will they still continue this week? And that's something we can use other tools to measure, like fib targets, for instance. We could put a fib on this swing high, swing low, and say, okay, where are the targets? Well, we passed the 132 minus 618 target, which was a crucial level in my opinion. We broke that. Good. We stopped at the minus 272. So we're all below those targets. So the next target could be the minus 1,000, which is at 130. And 130 is also a round number. All right. So yes, we have enough space. We can check the weekly chart, and then we bump into something of a support right in here. So all in all, to make things, not to complicate things, it's basically like we're like detectives trying to piece together pieces of the puzzle, right? And what do we see? We see strong downtrend on the monthly candle, right? The monthly candle was very bearish. We see a strong downtrend on the daily chart, big impulses, and weekly chart. So obviously there's a lot of momentum. Daily chart, we got very bullish, bearish moving averages, 5 to 6 angles. So obviously there's a lot of bearishness. Target is 130, but we have a weekly support at 131. Plus, we see that although there's not divergence between these bottoms, there is a bit of a divergence on the hourly chart between these bottoms. Therefore, although the 4-hour daily downtrend is looking good, on the hourly perspective, we have some divergence. And we're also bumping into a weekly horizontal support level. Plus the 4-hour AO leads me to believe that we could be in a bit of a retracement area. Doesn't have to be deep, right? We could go back maybe to, for instance, 132, right in here, or even the weekly monthly pivot. But anywhere between roughly 131.50, 132, 132.50, one of those three areas would seem the most likely turning spot for further downside in my opinion. So shorting right here, right now, doesn't seem to be that appealing to me. Unless price moves up higher, shorts start to become interesting again, or price breaks below 131, and I'll try to catch a smaller break. Let's say price breaks through it, consolidates on a 50-minute chart, then I want to position myself again with the next break. Fine. That would be the backup situation, right? Just in case I'm wrong and the divergence on the hourly chart doesn't matter at all. That would be, my backup plan to still capitalize on some movement there. And this is, as the ones that attend more regularly know, this is how I like to approach the market more often, because you have a solution basically more or less for whatever situation happens. And jumping in right in here at 131.28 for short, despite the bearish downtrend, doesn't make much sense in an area where I think there's a decent chance of probability. Obviously, we can only work with statistics or rough statistics, and I do think that there's a decent chance of a bounce. How much, I don't know exactly, but a decent chance. So it doesn't make sense to short it right into the 131 level. So that's about it. We can still look at the 50-minute chart, but in this case, I don't think it really makes much sense because I'm waiting for retracement. Would I want to trade it to the upside? Some might think, because you can look at it that way, right? If you think there's a good chance of a retracement up, why not trade it up? Those ideas sometimes work, but they are riskier because of the strong daily downtrend. There's a lot of momentum. As I said, the 21 EMAs are really at a 5 to 6 angle. It does make it riskier to trade it, therefore, to the upside. All right, so that is a bit of a risk because of that. Florian is asking, do I use 34 and 136 more frequently in my analysis? In the past I did. Now I actually use 21 and 89 a bit more. They seem to react a bit more with price. So I'm nowadays using this more, but in honesty, I think 34 and 136 is just as good in a way. It's just, I like that it reacts with price a bit more. Another good combination could be 21 and 55 maybe, for instance, even closer. Or even 21 and 35 if you want to measure momentum because what happens is that if 21 pulls away from 34, if 21 starts to pull away from 34, that means there's a lot of momentum, because the two moving averages are so close to each other that if these two pull away from each other, then really price is moving pretty fast. That's another way of doing it. Or 20 and 40, for instance, is also a popular combination. It's like a river effect, they call it, or they call it the river sometimes. I saw a study, which I have mentioned in the past, but just want to repeat that I read a study about moving averages. EMAs were definitely were better than SMA, more profitable, and the best EMA combinations. Actually, a lot of EMA combinations were profitable, but the best ones were actually ones that had were using two in a range of 30 to 50 or 20 to 50. So, maybe a 21 and a 55 could be a very good combination. Maybe I'll try that one day. For the moment, I'm used to 89, but anyhow, 20 to 50 EMAs are very, very good EMAs. Euro dollar is getting some bounce here. As I said, I think it's risky to trade it to the upside. Maybe if it really shows this momentum, though, which is kind of confirming what we were, the whole scenario that we were building here, we are seeing some spike up. If it doesn't become a big exhaustion wick in 4 minutes from now, what could be still maybe worth it is, excuse me, keep an eye on the H4. If price goes up to the H4 and it makes a small little mini bull flag and then starts to break to the upside, maybe a counter trend upside trade breakout could be still worth it, but it's very, very risky because it could easily turn into some exhaustion there. Pound dollar. Yes, it does. It does repaint, Björn. The Camarilla will show new levels at the new trading day, which is, I think, even earlier than the London Open. Alrighty, we can move on to pound dollar. Let me put on a new template so we start from scratch. We know from our monthly analysis that the monthly candle was bearish, not as bearish as the euro dollar, though, and that the pound could be falling to trace down to the 38.2 fib. With that in mind, we can take a look at, for instance, the weekly chart, and we see a lot of bearish candles. The daily chart, we see a pretty good angle. I wouldn't call it 5 to 6, but I would definitely call it maybe 4 to 5. Very nice. Price definitely below it, showing a lot of bearishness. And we are rounding on the AO, though, a bit here on the daily chart. Let me take a look. You see that's a bit of a difference with the euro dollar, which is not rounding as yet. You can see it's still red, whereas the pound dollar is a bit of green here. Now, typically what you would see when it turns green is not necessarily an immediate retrace back to the zero line. Sometimes it does happen, but sometimes we get a second bounce. For instance, here. We were in an uptrend, it becomes red, but we still get one more kick up. Here, we were in an uptrend, we are green AOs, but we get one red and one more kick up. That's something you see often. So what I would tend to expect here is this to turn into one more red and then up. That's something that could happen. Let me say it this way. We need confirmation, though, of that. But after that, I would expect maybe some retracement finally of this pound dollar. It has fallen so fast. 700 pips is quite an interesting amount. It's close to fib sequence numbers as well. Often enough, pips, the number of pips the currency moves tend to be quite close to Fibonacci sequence numbers. Now, maybe this is hogwash. I really don't know, because maybe it's just something that is coincidental, because there are many fib numbers, to be honest. But I have the tendency to see price move to certain fib sequence numbers, and one of those fib sequence numbers is 611, if I remember correctly. Yeah, or 610, I think, 610. So, and it was close to 610 here. So no wonder we had a bit of a bounce. And the next fib sequence number is all the way down at 1,000. So if we do break, we could maybe see a further fall. I don't know. But in any case, this was a strong fall. And if we look at the hourly chart, therefore, yesterday's wick here at the weekly R1 was a very interesting short. Anyone who took that trade, a great job. That could be a very nice swing trade. And we had a breakout of this most recently. If you use trend lines, that would be the breakout you're looking for. If you use moving averages, we had a break here. So if you're looking for price action, for instance, at a resistance spot at the weekly R1 at the top of a potential bear flag, yesterday's short would have been great. If you're looking for a breakout, either a short an hour ago or a couple of hours ago in Asian session, were other ways of getting into a downside trade on this pound dollar bearish trend. As I said, the daily is showing very bearishness, the 4 hour is showing very bearishness. Price has been below the moving averages with only a couple of retracements here that were immediately followed with downside, maybe not the last one. This is the first time that we've been basically going sideways that long, and it does seem like we're breaking to lower grounds again. So this is all nice, those trades that happened maybe earlier today and yesterday, but how would if you're not in the trade? Then we have to look at the 50-minute chart. And this is the time frame to look at a bearish trade to the downside, in my opinion. Why? Whereas the euro dollar was retracing to the upside on the 50-minute chart, therefore I think it was not so interesting. On the pound dollar, we're actually breaking with the trend to the downside. So that's, in that regard, the 50-minute chart is interesting to me. So in that regard, we can look for a pullback before trading it, obviously, because we already had the break, but there, this would make sense. A pullback to what level? Let's take a look more intensively at the pivot points as well. Weekly S1 is here. Let's take a look at the 4 hour candle. And the daily candle. Let's mark the current daily high. Wouldn't expect much more than that. That's at the daily pivot point. So a hook back probably, if we look at the fact that the daily is all the way here, the high, excuse me, a hook back probably to the broken trend line is all we would expect. So if we then zoom into the 15, $165.83, yeah, probably a hook back to this zone where we paused before breaking that trend line is the retracement we would be looking for, I would say. Anywhere 165.80ish, for instance, could be a good shorting area for downside. Stop loss preferably above here to make it a bit more safer. Not too close like here, because you never know, price could obviously retrace a bit deeper and retest this top right in here and then fall. So I wouldn't use too tight of a stop loss. That would be a way to enter a breakout to the downside. Will it work? We really never know. Trading is always calculating the odds and willing to take the risk at spots we really don't know if a trade will work out, but and no one ever does. But obviously there are good things to look for in this break. Most importantly, the fact that the 4 hour and daily are in such a strong downtrend. What could be the target of that downside? We have 165 level. Is a psychological round number, by the way, so I would probably aim for 165. Just above it for today. I mean, I wouldn't expect more necessarily today. 165.10 We could take a look at where the Camarilla is. That's 165.50. Well, that we already reached that. Yeah, 165.20-ish maybe, to be a bit more on the secure side, because that's the daily S3. Well, folks, my carpenter is here. I'll be really back in shortly, 2-3 minutes, and we can continue, okay? Thanks for your patience. Sorry, folks, that was not my carpenter. Actually, that was my aunt. Normally, I would ignore that phone, but I thought it was my carpenter. That's why I picked up. So I told her right away to call back later. Let's see. We're talking about, yeah, so the breakout, pull back, and go down to about that level seems the most obvious for today. Maybe too obvious almost, but that's what I would one would expect in this bearish 4-hour and daily downtrend to 165, maybe 164.60 tomorrow if the bearish momentum can continue. I wouldn't expect it today, but you never know. But maybe sometime this week we can retest this bottom. And let's see. Now the interesting part, you can use the AO and moving averages as well to count waves, by the way. I didn't mention that because I don't want to make it too complicated and scare people off, but you can use it. Now my wave count might be a bit slightly off because I was expecting a fifth wave to end here. And although to a certain degree it's true that we did get some kind of retracement here, it was not as big of a retracement as maybe I would have thought it would be. I thought that because of my counting, there was a decent chance of a fifth wave, of a fifth wave, of a fifth wave to be ending here, and we could get maybe a retracement of the entire downside. That doesn't seem like it's happening with this break, so that could be thrown out of the window. But you can count waves a bit with the AO and the moving averages by looking at when price makes strong falls using the AO. For instance, here we see a strong AO fall, right? So this is certainly not the last. Therefore, I was pretty certain that this was not the last move down. When we had a hook back here, I was quite certain, maybe 90% certain, that we would see follow through to the downside because of that, which indeed happened. In fact, last week I had a video analysis where I said I would short it right here, and that was so because of the AO. So you can use the AO to measure wave counts, and I won't exactly go into details on that because it's not today's topic, and I don't want to scare people off with that. So let's move on. But for the moment, looking very bearish, no matter what time frame we're looking at. The same thing, the dollar strength basically, we can view with the dollar yen. It took a while. We had a big triangle here, with the triangle finally breaking to the upside, and we're seeing the acceleration of that triangle. The question was this a pause right in here at the blue triangle for a break, or was it a pause because we just didn't have enough strength to break and would retrace back down? My assumption was upside. For those that have been here for a while already, was looking for a follow through to the upside already from here, saying, well, this is the second breakthrough, therefore the breakthrough will probably have more muscle and have a higher chance of succeeding than the first potential break. And that does seem to be panning out. We went all the way back to the zero line here. Okay, folks, this is now finally indeed my carpenter. But we went back to the zero line here. So, you know, a continuation at that point was possible when the AO goes back to the zero line. We'll be back in a few minutes. Thanks. Alrighty, traders, thanks for your patience there. So the dollar yen, yeah, of course the fact that the AO went back to the zero line doesn't mean we're going to break to the upside or break this resistance, because obviously that big resistance was important. It was the top of a consolidation zone, so there's no guarantee. All I'm saying is that often enough you do see, in cases where we don't have such a big level, that this is the bouncing spot. And also here we see that that is true. Now we broke out of that red resistance, so who knows, we could be really now into an aggressive upside mode on the dollar. We see the same thing on the euro dollar. Plenty of space to fall. We see pound dollar maybe having a bit more struggle for the moment with downside, but it too is in a downtrend. So there's a lot of dollar strength, and that could be great for the month of September. And in that regard, especially if we break above this top, we could really have tons of space up to 110, I would say. I'm sure there are levels in between that have some importance, but in general, it would have the potential to go up to 110, maybe 120. So this really would be a nice breakout after months of silence and sideways move here in this consolidation. So I'm pretty excited about that, and you can have pretty good breaks on this dollar yen. It likes to make shallow consolidations. It's looking like a good strength here as well. And usually speaking, the dollar yen likes to break, shallow consolidation, shallow flags, break. Doesn't make deep pullbacks. So especially the dollar yen could be nice to trade if a dollar trend is happening, even more so than maybe the pound dollar. Now, how can we trade it? Now, obviously, the target for any upside will be that monthly top that we put a line there, 105.40 for the moment. I mean, for an intermediate target. Just because I said 120, obviously, I'm not going to hold it to 120, although some traders might. But the way to trade it, now that we already had a big breakout like this, it's of course we'll have to wait for some retracements. Going in long here with a 50 target, not as appealing. Therefore, waiting for some pullback, probably a better deal. Obviously, if you took any of these breaks, you're doing very fine now, and you're doing a great job. So that was any of these breaks of, for instance, a trend line that you could connect by these tops or these tops, for instance. Now, if you're not in that trade, let's take a look at the hourly again. What kind of retracement could be likely? And from an hourly perspective, probably the daily pivot point would be the max we could expect, really max. That's probably too deep as it is. So with that in mind, probably the most realistic is to fib this big 4-hour candle. And I would not expect price to go further, much further than 105.50, 105.70. 105.60, probably 105.50. Could be already a decent bouncing spot. Stop loss, I would say, below the daily pivot point. 104. I would probably go to 104.17-ish, 13-ish. If you really want to be safe, 104.03, 104 safe, 07 below this bottom maybe, because that's the 4-hour fractal, right? At 104, let me check. 104.10. Besides that, you can see also in the monthly chart that last month we had a bullish candle with the close near the high as well, just like all the other euro and pound dollar we looked at. And that's the second month in a row, so we're getting a flying start this month as well, so let's see. Alrighty, that's the majors at the moment. Let's take a look at the Aussie. Aussie, not as clear cut, I would say, as the others with regard to the dollar strength. It still is in a pretty tight consolidation on the monthly chart, although you don't see it maybe here, but it's about 5 months going sideways. You can see it better on the weekly probably and the daily, right, as price goes flat. In this case, the moving averages show that flatness by going most of the time flat at a 3 angle. And sometimes we see kind of a 3 to 4 angle here, and a this is a 2 to 3 angle, and this is more a 3 to 4 angle, sorry. Right, very flattish angle. You do want to make sure also that you have an appropriate number of candles in your view on your chart, because otherwise you're distorting the angle. If you zoom in a lot, then obviously you're going to have a very flat angle, even if price is moving down pretty fast. So the Aussie is kind of matching the dollar strength here at the moment and just going sideways. And what I wouldn't be surprised is, I want to keep an eye on this bottom line. I wouldn't be surprised to see a break of that. Or, just as equally valid, is a break to the upside. But then if it does break to the upside, I would expect kind of a false breakout. With this top pretty close by, if it does manage to push up, I would expect kind of an exhaustion to the downside and back into that zone. But until that happens, really we have no business, I would say, from a moving average point of view to look at this pair. If you like trading ranges, it might be something to trade, because there are bounces at pivot points still, there are bounces at tops and bottoms, but from a moving average point of view that's looking for a trend, there's none on the higher time frames. Maybe the 15-minute chart is looking differently. We had a good breakout to the downside here. So from an hourly perspective, if anything, it looks like bearishness. Not so visible on higher time frames, but if we zoom into the hourly, you can see we broke this trend line with a good impulse. So a hook back up to a pullback back to the pivot points and the broken trend line could be a resistance zone for more downside. Let's take a look at the Euro. Let me get rid of this template again. The Euro is not as easy to read. We are breaking through or trying to push through a support line which is at, the low of that candle is at 140.50. We didn't manage to, we broke it by a few pips, not really that much. Obviously we're in a big downtrend, but there's kind of a double divergence here, which is a bit worrisome, let me say it this way, but it hasn't changed the trend as yet. We got divergence on the 4-hour chart as well, plus the hourly. This is making things a bit difficult to trade on the Euro. We did see strong follow-through of the downtrend so far. So in that regard, maybe this is again a rejection right going on right here. 23 minutes from now, this hourly candle is finished, and if it shows something like this, it could be a candlestick pattern, bearish candlestick pattern maybe for move down. But all that divergence, plus that big bottom of the 140.50, does show me that I would be a bit cautious for the moment on the Euro-AUD. Despite the Euro-dollar bearishness and the AUD-USD sideways consolidation, looking at the Euro-AUD, it's not that interesting. Euro-yen, though, is moving pretty fast to the upside. This is where we had a big break of a trend line like this. In fact, so maybe you took that trade. If you took that breakout above the pivot points, that's good. Above the trend line, doing very well. And I would probably wait for some kind of exhaustion wick like we are seeing now to probably close that trade because this has moved up so much. Well, the other way is having a bit more patience because what we could see easily is maybe some smaller bull flag and one more push up, but it depends how much risk you took on the stop loss as well. And you see that EJ, for instance, went well past the H5 Camarilla. So this is one of those days where a currency like this already had its breakout, had its massive move earlier today. Doesn't mean that in the New York session we couldn't see one more move up, but it's never going to be, well, never say never, but it's probably not going to be as impulsive as this leg though. Dollar CAD is quite funny in the sense that, let me grab a blank template here. The funny thing is that if you look at the monthly chart, all of that movement of the last 7 months, all of it happened within one bullish candle dating back to January this year. And every month after that has been within that bullish candle, which is kind of funny in a way because it's hardly went anywhere. It's just stuck in that range within that one bullish candle. So does it mean that price stayed within that bullish candle, that it still has more bullish momentum? I think yes, it does. But it's about time that it moves now, because if you use the time rule that I use, 6 candles, we should see a break of the high. Otherwise, the momentum is out of scope, is not active anymore. We had a recent high. We had a high March 2014 here. So let's count them here. 1, 2, 3, 4, fifth candle. So this is the kind of the last candle I would like to give on the dollar CAD. Otherwise, I would be a bit cautious with the uptrend. I would expect the dollar CAD to make that push considering the other dollar pairs we've looked at. So probably we will follow through on that. And this is just a retracement of the upside and retracement of this candle. And we'll most likely see the follow through. We also bounced off of the broken top right in here, plus this trend line with pretty good monthly candles right here. Last month was still cautious, but this month I would expect it. So let's put on the moving averages again. So one breakout could be good is waiting for the break of these tops, obviously. And price is trying to push up as we speak, in fact. I would still be cautious today because it is at the monthly and weekly. So although long-term bullish, for today, I would like to see today basically how today's candle reacts, because I think it's in a bit of a difficult position. If you took a trade based off this daily pin bar, that's something different. For instance, that could be a good rejection wick off of the 50 fib, for instance, like this. That is something different. If you took that 50 fib or the pin bar off the 50 fib, I'll just wait and see. Otherwise, if you're not in that trade, I would probably wait for today to finish and wait for today's daily candle to retrace. Four-hour engulfing twins here. Maybe this level could be a bouncing spot, but looking at from a 4-hour perspective, maybe that could be something of an interest here long. But from an hourly perspective, you can see how many pivot points are still close by, and I would rather see price pull a bit more further away from the zone. Kiwi's just looking bearish as well at the moment, like the pound and euro as well, and would expect follow through. Let's take a look. From a 4-hour perspective, we broke below the 21 band right here. That looks like a breakout to the downside. So just like there was another currency we were saying break, pull back, and go. I forgot which one. Oh, pound dollar. Just like the pound dollar, maybe for price to go back to the daily pivot point could be a good rejection level, or the weekly for further downside. So Kiwi looking bearish as well, just like the pound. Euro, I'm cautious, as I said, waiting. Dollar yen waiting for retracement, just like the euro dollar. Pound and Kiwi looking more bearish. Dollar CAD waiting. Aussie could be bearishness from the pivot points for downside, just like the Kiwi and pound. Euro yen wouldn't trade it at the moment. Euro odd wouldn't trade it at the moment. So that's a quick summary of what we looked at so far. Does anyone have a particular currency pair in mind they would want to take a look at? We can do it right now. Pound yen, certainly. Let's take a look. Let's see, pound yen. Let's take it from the monthly chart, first of all. Well, we, of course, still see the dramatic rise of the pound yen from its 117.16 level all the way to its 175 level for about 6,000 pips. But 1, 2, 3, 4, 5, 6, 7 months sideways, although we had, technically speaking, a higher high in July. These monthly candles obviously are very small for the pound yen compared to other months. Very indecisive, most of them. Not much really to say on this monthly chart, except maybe that here's the bottom, here's the top, very simply put, because otherwise we did have a higher high here, so we're still in that mode. We're still in the upside mode, although we're not really seeing a lot of it in this year. But if the dollar yen does break to the upside, we could probably see some follow through on the pound yen too. Weekly chart got bullish candles above the moving averages. In fact, pretty interesting situation that price is getting back to the zero line here. We don't have any divergence between the weekly tops, so that's a good case for the bulls. This trend line broke, so that's out of play, but we also broke this trend line, as we can be back in an uptrend break of this trend line right in here. So this breakout on the 4-hour chart is happening. It's also on the hourly. So in that regard, the most likely event is a pullback and continue up to resistance. What kind of pullback would we like to see before trading it? Just looking at the pivot points, we see kind of two levels, the daily and the weekly, monthly confluence plus trend line that we can think about. Plus an L3 here. To be honest, I think that this zone plus a daily seems the most likely. That deeper retracement is possible, but less likely at the moment. Actually, the question is, can we even go down to the daily pivot point? We might not even get there. So two things, either wait for the retracement, or if we don't get that low, we'll have to wait for some kind of pattern, and we'll probably somehow position them ourselves either by waiting for the end of the pattern or the break of the pattern for upside. So what type of trade could make sense for a bouncing spot? Let's take a look. Yeah, anywhere in this zone, anywhere where the daily, the daily pivot point is the lower part. This top is the higher part of that zone. Anywhere in that zone, we could see a bounce. And Björn is now Kalian is saying 173.30, which is exactly at the top of that zone. Stop loss 173.08, which is below that zone, and the target 174, which is at pivot points. Yeah, makes sense to me. Great stuff. Yep, that looks good to me. The stop loss is tighter and not below the weekly and monthly, which makes sense to me because it would be quite big, that stop loss. Great job. Makes a lot of sense to me. Looks good. 174 is also a resistance probably here. Yes, it is. So that 174 target makes sense because we got resistance here and a resistance there. So yeah, that looking good. Pull back and go. And then probably down again. Next one on the list is Odd Swissy. A request from one of our traders here. Let's take a look. Odd Swissy. Let's see, monthly chart. Successive bullish candles to the upside. So in that regard, this low could be quite vital. Wouldn't expect a break of that low necessarily. That's this bottom as well, right in here. Although price is very much looking like a channel or even maybe rising rising wedge, depending on how you draw that trend line. Moving quite sharply, plus divergence between the tops. Although it's an uptrend, I'm a bit worried about the upside. And if anything, maybe it could be even worth a reversal trade on this Odd Swissy, but that's obviously risky because it's reversal. So we've had dips into the 21 band before, in here, here, and here. Those are bouncing spots. This might be still a bouncing spot too. And we are bouncing off the weekly pivot point. So uptrend, reversal signs, but despite the reversal signs, this could still be a bouncing spot. And despite the uptrend, this could still be a moment that we could make a bigger reversal. Kalian is saying Odd Swiss broke 85.74 and therefore doubts the up move. Yep, yeah, me too. If anything, maybe we could see an upside that finds retracement. I mean, hits resistance for downside. That's all. I think indeed too. Probably see some kind of head and shoulders here. So maybe looking for a resistance spot when price does bounce here at about this level could make sense. It is a reversal trade, but in this case, I think it does make sense. Is it worth buying here to sell, to that selling point? That's the question. That depends on your own trading plan. I would say probably not at the moment. In my opinion, it's a bit too tight, but let's see if that reversal does play out. I mean, it's always difficult to time the exact reversal, and often enough, timing is difficult with that. XAU USD. Looks like we're pretty stuck in this particular triangle between the gold and orange lines here. A break of that triangle obviously would give us information whether it's an upside or downside potential. Looks like we're trying to break through as we speak. We haven't as yet. We do have a bottom here in play. We are certainly getting close to it though. So that looks bearish. How to trade it is another matter, but a break would be bearish. One way would be maybe waiting for a daily candle to break through it and waiting for a retracement of that daily candle back to 1274 for a short. For instance, like this, bearish candle, wait for a retrace back, and then short it. So there's still a lot of stuff maybe to look for. But that's probably how I'd rather wait for shorting gold. If you're looking for a sell, I wouldn't sell right in here because to me it's too close to this bottom. If you sold it somewhere maybe in here upon this trendline break or this trendline break, that's a different matter because you still have space down to support. Now we're at the trendline. We're at a potential bouncing spot, so therefore would rather sit tight. But if it does break, if I would be trading it, I would be looking for a retracement after that. Well, I guess moving averages you probably could use on gold and silver as well. I never have, unfortunately, so I'm not can't say it with certainty. I do think, though, that moving averages are a great tool, and I would imagine, in my humble opinion, that they would work fine on other things like commodities and stocks as well. And but we're not looking at moving averages, in fact. We're not just looking at trend lines. Let me put on the moving averages. But without moving averages, I would say yes. Pull back, break, pull back, and go. Let's put on the moving averages. 4 hour does have a bit of bearishness. The daily chart you see is, why is this a chart pattern wedge? Because look at the moving averages. It's just going sideways. But if anything, there is a bit of bearish momentum, obviously, still from that weekly chart. Big fall, triangle pattern, still below the moving averages. This could be an A, B, C, D, E, and triangles finished. But we never know for sure. We need to wait for that confirmation, which is break with this line. Silver looking more bearish actually. We had a triple bottom instead of a triangle. This is more looking like a descending wedge. When we break the bottom, we could see a fall down to 15 probably. If we break this top, we could see a retracement maybe up to 25 again. So in that regard, the lines in the sand, the bottom and the orange line here. And in the meantime, price is bouncing back and forth in between those two things. However, this is looking more bearish than gold, even because of the fact that this triangle is a descending triangle with a flat bottom and tops getting closer to the bottom, which means that although we can't break support, every time we go up, we find resistance. Well, thank you so much for joining. We'll be back tomorrow. By the way, let's take a look. Tomorrow we're taking a look at strategy, and Nena is going to take a look at different approaches to breakout trading. Thursday, Camarilla, and optimizing your approach to exits. So I would hope to see you all on all of the webinars, especially Thursday evening. optimizing your approach to exits for better trading results. I think it would be very useful because exits are, usually speaking, under-analyzed, underused, not as important most of the time to traders as entries, and often therefore not given the attention they need. So I would definitely recommend this particular webinar on Thursday, optimizing your approach to exits. In the meantime, wish you good trading and hope to see you tomorrow in our Forex strategy webinar. See you soon. Cheers.